Hello guys, it's Max here from Daily Market Movements, and before I start this video I just want to say a huge thank you to everyone who signed up and took advantage of our sale that we had on this weekend. Unfortunately it's come to an end, but once again I just want to say a huge thank you to everyone who got signed up. It was our record breaking week in terms of people subscribing to our signals. But if you didn't get involved in the sale, then do not worry, you can still receive signals from myself and the team here at Daily Market Movements by simply visiting our website www.dailymarketmovements.com. Our website link is below this video. We charge a very small fee of $199 for a 12-month subscription. So in front of me is the Nasdaq 100 futures chart, and as you can see today we have had a rather bullish day. This seems to be the only market which hasn't ended the day flat. We are currently trading at that 7,810 level, which is below that crucial huge psychological number of 8,000. If you've been watching my videos last week, I have been very bearish on the Nasdaq 100. I still believe we will retest that $7,000 mark. The US has now become the center of the pandemic, and quite frankly, the coronavirus cases are surging there, and I think there's been a lot of bad decisions taken by the government in the United States. For example, Donald Trump not quarantine New York. People are still moving around freely, leaving New York into different states, and I just think that is a recipe for disaster and cases. They should be taking notes from Europe, from China. China were very quick to shut things down. Italy were a bit slow, and look how bad the virus spreading is going there. Same as Spain. France took action early. Germany took action early, and now the curves are starting to flatten. The UK were a bit late. But it's still a bit early to judge the UK as of yet. But I think that the US have made a big mistake by not closing down these states. So I still think there's plenty of bad news to come out of the US. And I do see the Nasdaq 100 getting hurt. So quite frankly, this is the range that we're trading in, 8,000 to 7,000, and as you can see, we are at the higher end of the range. I am bearish, therefore this means that there's great value for short sellers. You've got a potential 1 to 4 win-loss ratio here, borderline 1 to 5. If you put your stop loss just above the 8,000 level and you target that 7,000, you're looking at more of a 1 to 5 loss-win ratio. Also, another bearish development on the Nasdaq 100, which could potentially happen if we do drop down towards 7,000, is the crossover in the EMA. The 50-day EMA is about to cross under the 200-day EMA, which is a very bearish signal for the Nasdaq 100. In terms of the RSI, we are in the middle, so this leaves us plenty of territory to go to the upside. However, it also gives us plenty of territory to fall to the downside. All in all, I have no interest in buying this market unless we do break above that 200-day and 50-day EMA as a day trader. I am bearish, and I think it's only a matter of sessions now until we do retest that $7,000 level. We just need some bad news regarding the coronavirus and the United States for the market to fall to that level.